Welcome to NextGen Investors, where future meets fact. Today, we're talking about one of the most awaited IPOs in India, NSDL, National Securities Depository Limited. This company is the backbone of our stock market system, yet many investors don't fully understand how it works. In this video, we'll explain what NSDL does, how it earns money, IPO details, financial performance, strengths and risks. And finally, should you invest or not? Let's begin. What is NSDL? NSDL stands for National Securities Depository Limited. It was established in 1996, and it's India's first and oldest depository. Think of NSDL like a digital bank, but instead of storing money, it holds your stocks, bonds, mutual funds, and other securities in electronic form. Whenever you buy or sell shares in the stock market, the delivery happens through NSDL or CDSL, and NSDL typically handles the larger value transactions in India's DMAT system. It's a systemically important financial infrastructure, regulated by SEBI. What does NSDL do? How does it earn? NSDL provides critical infrastructure to the Indian capital market. It maintains DMAT accounts, facilitates securities settlement, supports IPO allotments and corporate actions, offers KYC and PAN verification services, provides tech solutions to brokers, custodians, and RTA's revenue model. Annual fees from listed companies, transaction charges per investor action, KYC authentication, and other value-added services. In short, NSDL has a stable, recurring income model with high margins. NSDL IPO details. As of July 2025, NSDL is expected to launch its initial public offering, IPO, very soon. Key highlights: IPO size, estimated around 4,300 Indian rupees crore. Type, offer for sale, OFS, no fresh capital raised, promoters selling stake, IDBI Bank, NSE, SBI, HDFC Bank, SUDI, UTI. This IPO is purely for providing exit to existing shareholders. The price band, listing date, and GMP are expected to be announced shortly. NSDL financial performance. Let's look at NSDL's performance for FY23. Total revenue, 1,099.81 Indian rupees crore. Net profit, 234.81 Indian rupees crore. EBITDA margin, 70% ROE, 16.4% ROCE, 21.8% debt, zero cash flow, strong. It's a highly profitable, asset-light business, with one of the best margins in the financial services sector. Key strengths of NSDL: first-mover advantage, trusted since 1996. Backed by strong institutions like NSE, SBI, HDFC, IDBI. Monopoly-like setup, India has only 2 depositories. Stable revenue from DMAT fees and KYC services. Scalable, tech-driven, low-cost infrastructure. Strict SEBI regulation ensures transparency and trust. These factors give NSDL a high-moat business model, making it difficult for new players to enter. Risks and concerns. But no investment is without risks. Here are some key concerns. The IPO is offer for sale only. The company won't receive new capital. Growth is tied to overall expansion of India's capital markets. Heavy dependence on SEBI's regulatory framework. CDSL is already listed and has a stronger retail presence. Valuation risk. If pricing is too high, listing gains could be limited. So, IPO pricing will be a critical factor for investors. Should you invest? Here comes the main question: should you apply for the NSDL IPO? If the IPO pricing is reasonable and the GMP gray market premium is positive, you can consider it for listing gains. Long-term investors should compare it with CDSL once valuations are announced. NSDL may offer steady returns, but it's unlikely to be a multi-bagger like a small-cap stock. In summary, apply if the valuation is fair and GMP is strong. Avoid if it looks overpriced compared to listed peers. Long-term, consider only if you want a stable, SEBI-regulated stock in your portfolio. Conclusion: NSDL is not just another IPO, it's one of the pillars of India's financial market infrastructure. And now, for the first time, retail investors can become part of it. But remember, strong brand doesn't guarantee strong returns. Always check the valuation, listing details, and market sentiment before applying. If you found this video helpful, don't forget to like, share, and subscribe to NextGen Investors. We bring you honest, easy-to-understand content on finance, IPOs, and investing every week. Disclaimer: this video is for educational purposes only. We are not SEBI-registered investment advisors. All information is based on publicly available sources and current as of July 2025. Investing in the stock market involves risk. Always do your own research or consult a certified financial advisor before investing. Thanks for watching, and we'll see you in the next one.